How to start and operate a small business. Your business might be small, but the effort it takes to start and operate it is big. From the first significant step of writing a business plan to the legal mandate of filing business taxes, the nitty-gritty of entrepreneurship isn't for the lazy.
Being a business owner isn't for everyone, said Hillary Tunstall, founder of New York City design studio Diet. You need determination and solid crisis management skills. Many articles on entrepreneurship and starting a small business get far into the weeds for someone simply looking for an
Steps for starting a small business. Starting a small business. You've come up with the idea for a business and, hopefully, you've done the research to determine there's a market for the service or product that you plan to provide.
Write a business plan. Even if you don't need investors, it's smart to write a business plan, the foundational document that will lay out how the company will operate and grow. If you do need investors, though, the plan isn't optional. Those who are going to pony up cash will want to know exactly how.
Acquire funding. A lucky few will have cash on hand to start a business. Others will have to either raise or borrow the capital, using that business plan to convince investors that their company is worth the money. The amount of money you need to start depends on the type of businesses and expenses are.
Select a legal structure and register. The legal structure that you set up for your business impacts personal liability, business registration, and taxes before you register the business. While you can change the structure in the future, those changes could be restricted and result in a number of even unintended dissolution. Common business structures include
sole proprietorship. If you don't register as any other type of business, the company is automatically considered to be a sole proprietorship. This gives you complete control of the business, but it means that your business assets and liabilities are not separate from your personal assets and viabilities.
Partnership.
This allows two or more people to own a business together. Limited partnerships. LPs have one general partner with unlimited liability and others with limited liability and limited company control. Limited liability partnerships. LLPs give limited liability to every owner and protects partners against the actions of another partner.
Corporation.
This structure avoids the taxation drawbacks of C Corp but requires specific criteria. Limited Liability Corporation LLC. This protects you from personal liability, saving your personal assets if the company faces bankruptcy or lawsuits. However, you must still pay self-employment tax contributions.
Give the legal structure of your business plenty of thought.
Many business startups run too long as a sole proprietorship or general partnership, said David D. Shine, MBA, JD, Ph.D., President and General Counsel of Claremont Management Group. This can expose them to liability that could hurt their personal estate and not just their business interests.
However, if there is more than one owner, an attorney should be retained to prepare the operating agreement, which will control the business, he said. This document is not filed with the state but is extremely important.
Obtain business insurance.
With just one accident, disaster, or lawsuit, your business could be a goner. Even if you're structured as an LLC or corporation, their protections only go so far.
Insurance, however, helps keep that from happening. In some cases, you might be legally required to purchase business insurance, particularly if you have employees.
Operating a small business.
Once you've gotten through all the legwork of starting a business, it's time for the real effort to start. Operating a small business is about more than just buying and selling services and products, though, of course, that's a vital part of making the business successful. However, there's a lot of administrative work that goes into operating a company, even those that are small.
What is bookkeeping?
Bookkeeping is the recording of financial transactions for a business. It involves preparing source documents for all transactions, operations, and other business episodes.
What do bookkeepers do?
Bookkeepers are the financial record keepers of a business. They collect invoices and receipts, record cash flow, pay wages, and prepare tax documents. These are some of the tasks that bookkeepers perform. 1. Manage accounting systems. Getting your accounting system set up and maintained requires close attention. A bookkeeper will help you get your accounts and invoicing set up and get your clients into the system and will keep it all up to date.
2. Process invoices, receipts, payments, and other financial transactions. A good bookkeeper will make sure invoices are sent promptly, follow up on late payments, and manage all cash coming into the business.
3. Manage payroll. A bookkeeper can check timesheets, allocate any commission payable, calculate payroll tax and superannuation, and keep accurate employee records including their bank account details.
4. Prepare financial statements. A bookkeeper will provide regular financial reports, producing weekly or monthly reports that provide useful information on your business performance.
5. Reconcile accounts and prepare reconciliation reports. All business expenses need to be recorded and reconciled to any purchase, orders, and receipts of delivery.
6. Manage any loans or debt repayments. If you have any business loans or debt repayments, a bookkeeper can manage and report on these as well. 7. Calculate GST and prepare and lodge your BIS. Your bookkeeper should be a registered BIS agent, which means that they can prepare your BIS in line with the auto requirements.
8. Prepare forecasts for your business. A forecast contains fixed costs, variable costs, revenue, and cash flow and helps you plan for your business financial needs.
Thank you.